Okay, moving on to vol. So BTC realized vol continues to charge higher on the spot breakout. So managed to get into the 80s on 10-day realized, which is pretty punchy for Bitcoin. Obviously did fade back a little bit overnight once it touched 28.5, and implied vols kind of drifted on that. Implied vols really struggling to keep pace though with realized. So we do see carry as negative right now. So seeing carry as nearly 20 vols negative there. Ethereum realized obviously not rallying quite as much, only rallying like 3.5 to 5% in spot, where 1850 has proved to be quite hard to get over. So ETH 10-day realized was up about 5 points, up to 73, which is materially lower than Bitcoin. And we can see the carry there is negative, but not quite as negative as BTC. And then implieds, like we said, have started to drop before realized, suggesting that option traders at least, are thinking maybe this up leg is done for now. It's going to be a bit of consolidation around this 29K area on Bitcoin, and maybe people are a bit more comfortable letting some vol go that they've owned and done quite well off in the last week. All right, moving on to term structure. So term structure, BTC shifting higher. The front end was already pretty pumped, so that hasn't really moved, but we saw a bit of a shift in the longer maturities now. ETH curve is pretty stable, although the weekly's drifted. The rest of the curve is unchanged. But the big thing is this ETH Bitcoin vol spread has kind of collapsed, right? So we saw the front end move down, to zero or just below zero, because the realized was moving in the favor of BTC. We did not expect to see the back end come down so quickly. So this collapse in the back end down to pretty much zero to 1 vol in the 6-month bucket, and kind of now looking at levels that are BTC vol over Ethereum vol in the shorter dates. I mean, that was pretty surprising. So you can see here on a 2-year history, we've got the ETH BTC vol spread. This thing dropping below zero is very rare. And this is pretty much as low as it's been. Bitcoin over would be as high as it's been, but basically in 2 years. So quite a dramatic move there. Statistically, we obviously like the long side of the ETH trade here, being long ETH. However, we don't really want to fight this price action. If Bitcoin breaks above 29K, like we said, it could have another quick 4,000 points to go. And if ETH can't participate in that upside, you're not going to do well being long ETH, short Bitcoin vol, right? So something to be careful of at this juncture, because there is a bit of an inflection point here again. So I'm not adding risk. I've still got the strangle swap on in September, but I'm not adding risk here. The positioning setup as well, where ETH dealers have been long upside, long Vega on the upside, has made it difficult for ETH to perform on the way up like Bitcoin has, where dealers have been more short. So the positioning setup has also kind of drive that, as well as the fundamental story being one where there's good reason to buy Bitcoin. Okay, looking at SKEW, shouldn't be surprised to see that the SKEW's completely flipped over towards calls, obviously driven by Bitcoin. So Bitcoin SKEW's now around 6 to 7 vol points, depending on where you are on the curve. 6 to 7 vol points for 25 delta SKEW, with calls trading over. ETH SKEW has also flipped and has moved by a similar amount, but its starting point was about 3 vols for puts. So it's moved to maybe 4 or 5 for puts now. So it's not quite as dramatic a call SKEW as what we see in Bitcoin. But the fact that it's flipped significantly is interesting as well. Maybe some people thinking ETH has lagged, so I've got an opportunity here to own ETH calls because there might be a catch-up trade there, and then there's good value in owning those ETH calls, right? So that might be what's driving that. Now, for those who are patient enough to wait until 28K before putting on any hedges on their Bitcoin, this looks like an amazing entry point with this deep call premium that is now in the market. So an example would be if you look to end of June, the 24,000, 35,000 risk reversal is near zero cost. That would give you protection from down 15% from here. If we're at about 28K now. And it would also give you upside on your holdings for another 25%. So 15% downside is where your protection would kick in at 24K. And 25% upside from here at 35K is where you effectively get taken out of your Bitcoin holdings, right? So it might be an interesting one for people who own this stuff, who've managed to sit tight, watch it recover, still want to own it, but wouldn't mind getting a hedge in place and are comfortable letting some of it go at 35K, which seems like a really juicy level, right? So that's kind of the logic there. All right, so that's what we're seeing in the vol space. If we then move over to kind of the flows, record volumes, we're talking about $10 billion notional trading in options on Bitcoin in the last week. That's massive. It's pretty much equal to what we saw in 2021 when Bitcoin was near the highs in terms of its actual dollar value. So you can just see the contract notionals have gone up so much to make the notional values the same is quite staggering. Now, most of the flow was focused on calls, although the 28th of April 22K puts were sold in a decent clip. That was the main sort of put selling that we saw. The real action was on short-dated upside, which obviously helped drive that call skew higher. Now, the earlier prints in the week were focused around March, April expiries, buying things up like the 26K up to the 30K strikes before the break higher. Obviously, some profit was taken once we got the move, but then also any fresh bullish structures have now moved over to call spreads in May or June expiry. Looking to buy like the low 30K strike calls and sell the high 30Ks or even into the 40K area to just kind of put their call spreads on there. So that's the type of activity that we've been seeing in BTC. And that's why the volumes were so high, right? Because obviously if you're trading big size in call spreads, there's two legs to those trades as well. Okay, if we then look at ETH flows, a bit more subdued, probably about a third of the volume of what we saw on BTC. Focus was obviously still on calls. Put sellers were out as well in April, 1,400 puts being sold to obviously earn some premium, fund some call buying. Two-way flows in the upside though. March to April upside, 1,700 to 1,900 call area. Saw buyers, but then also saw profit taking as they didn't wait around. And then also saw some rolling going on, right? This arrow shows you we had some 1,600 calls in April being rolled up into 2,000 and 2,100 calls via call spreads being sold basically once the market had its move up to like 1,800-ish. Okay, so that's where people roll up their options that have gone in the money back up to something with more leverage and with lower premium to kind of reset that leverage of your optionality, basically. All right, dealer positioning. So BTC remains in negative gamma. It got there last week. It kind of stayed there, obviously, with all the call action, all the buying. You can see here we're in negative, firmly in negative. Looking at the actual strikes, there's this kind of zone between 26 and 28K where the short-dated expiry is 24th of March, 31st of March. The dealers are clearly short there. So that's what's providing this short gamma. As you can see on the upside, we're seeing some longs come back. So it looks like it's fairly local short here. It's like a pocket of short. If we were to rip through 30K, obviously there may be more call buying that comes in, but bear in mind, a lot of the call spreads that have been bought already are a bit more longer dated, that people are going to wait to let this thing play out. So maybe dealers don't need to scramble as much on the upside. So we may well see that positioning in Bitcoin go back higher, even if spot goes higher, which is not something we've seen in recent weeks. Looking at Ethereum though, positioning is more neutral. You can see here, we've got some longs in the kind of 1,800 and above, and they're scattered across various maturities, even as far as September. So it looks like the street is long Vega, especially. Gamma-wise, we have got a few pockets of shorts to the downside, down to 1,700, 1,800. So we think in general, the street looks like they're long Vega, they're long upside Vega, and they're short local to slight downside on the gamma side of things in Ethereum. And that's keeping the overall gamma position quite neutral and is keeping the overall Vega position quite long, which is why Ethereum Vega just isn't catching any kind of bid. But also spot isn't moving either, right? So a couple of reasons why Ethereum really lagging from the vol side of things, and that's exacerbated by positioning. What have I been up to? All right, that is your summary for crypto. Thanks a lot for listening as always, and I'll catch you guys all next week. Thanks.